Hello and welcome to the Business Standard Banking Show.
Yeah,
LIC Housing Finance reported a healthy set of numbers in the first quarter, with net profit increasing 43% year on year to more than 1,300 crore. Its net interest margin also swelled to 3.21% as compared to 2.51% a year ago. Tribhuwan Adhikari, who was appointed as the MD of LIC Housing Finance in June, is with us today to discuss the Q1 numbers and the road ahead. Mr. Adhikari, welcome to the show.
yeah. Thank you, Manojit. Thank you for having me.
First of all, sir, the disbursement, loan disbursement, total disbursement fell in Q1 to about 11,000 crore from 15,000 crore in the same period of last year. Both the individual home loan segment and project loans declined. What could be the reason for the decline?
Yeah, Manojit, it's true. It's true that the first quarter disbursements were on the lower side. 15,000 crores was what we had done last year, and 11,000 this year, Q on Q. Two reasons, basically, if I say nothing to do with the external environment, it was basically all internal. This year, two things happened. At LIC HFL, we went in for a major restructuring of the organization, number one. Let me expand on that. We changed our structure from a 4-tier structure to a 5-tier structure. Earlier, we had the corporate office here in Mumbai. We had our regional offices at 9 locations, all your tier 1 cities. And then we had our back offices, and then the area offices, or the branch offices, as we call in any industry. This year, we have introduced a new tier in the form of cluster offices. This is between the regional of the back office and the area office. This was basically done, number one, with a view to improve our TAT, improve our servicing standards, because what we were experiencing, or the experience was that movement of files or decision-taking time from the area office to the back office. Back offices were doing the sanctioning and the disbursements. That was taking a lot of time. Plus, because one back office was looking after too many area offices, again, there was a problem in handling of large number of cases. So this one organizational restructuring took place. Number two, we also opened 50 new area offices. All these offices
Area
were
offices.
50 new area offices. These are our basic branch offices, of what we call. These are the officers who are really in touch with the customers, where customers come for their loan requirements and other things. And these offices were mostly opened in tier 2 and tier 3 towns, considering the potential of these areas. So this because of this restructuring, there was a lot of manpower redeployment, if I mean. And actually, as you know, if people move from location A to location B, they do take time to settle down and other things. So that was one. And the other was, at the same time, we went in for a major technological upgrade. We changed our technological platform altogether from our older system, which was introduced in 2012. We went in for a total new technological software platform. That created some issues.
So you think that the Q2 numbers will not reflect any disruption that has happened in Q1?
Q2, yes, we are trying to, of course, Q1, the disruption that happened, that is there. Q2, we are trying to ensure that there is no disruption as we move from quarter 2.
Have you seen any impact on the loan demand due to high interest rates so far?
Of course, we can say that housing finance is interest rate sensitive, but one way of looking at it be that any consumer who wants a housing loan, for example, if I want a housing loan, of course, the rate of interest would weigh on my mind, but I don't think it would be paramount.
Now, RBI also recently issued some statement on EMIs. They said the customers should be informed whether the EMI is getting increased or the tenure is getting elongated. What is the impact on this on housing finance companies in general and LIC in particular? Have you seen EMI tenure increasing, going up very sharply in the last 6 months?
No, what has happened, let me tell you very thing. Immediately after the sort of 200 basis points increase in your repo rates by RBI, our
250 basis points, yeah.
Because when we passed it on to the customers in 3 tranches in June, in September, and in December, EMIs did go up. EMIs did go up. And as is envisaged in the understanding with the customer or the agreement with the customer, that is usually met through an increase in tenure of the home loans. So basically here in LIC HFL, we are very upfront about it. It is clearly declared to the customer, and the maximum enhancement of tenure that we allow at HFL is 5 years. So assuming
5 years.
Yeah, 5 years. Yeah, assuming you have taken a loan initially for a period of 20 years, interest rates have gone up, your EMIs have gone up. So I can ideally keep your EMI at the same level, not increase your EMIs, but increase the tenure of your loan. So
Right.
that is done. What RBI basically was talking about was RBI wanted there to be complete transparency as regards increase in tenor, increase in interest rates, the current interest rate being applied, etc., etc., etc. The RBI has come out with directions. I think these are going to be implemented from the 1st of January 2024. Every housing finance company has to be compliant. Every NBFC, in fact, has to be compliant. We are, as it is, I believe we are 90, if I would not be wrong, 98, 99% compliant. Some non-compliance of 2% or 1%, we'll surely adapt to that. That's coming January.
Also, RBI has said.
Yeah, we want to do it much before that.
So also RBI has said the customer should get an option to convert the loan into a fixed rate loan and vice versa.
Yeah.
So LIC Housing Finance has a fixed rate product, isn't it?
Yes, we do. We do. Most of our products, whatever is selling, is in the flexible rate scenario. But RBI has said that yes, if there's a fixed rate product, the RBI, the customer should be given the option of rewriting. What we call in our business is rewriting. That means he can apply to us for lowering of his interest rates or shifting from fixed to the floating rate regime.
So overall, if I can ask, what kind of loan disbursement you are expecting for the current financial year on a year-on-year basis?
Year-on-year basis, our guidance was 12 to 15%. We still maintain the guidance. Yes, there is a lot of talk of maybe a huge uptake in loans in the coming period. But I would not be too, of course, I agree everything is great. Everything looks great outside, except maybe for the geopolitical situation outside, wherein US and Europe are facing recessionary trends, and of course the Ukraine conflict and other things. So again, I have a very positive outlook, and I would still maintain that 12 to 15% year-on-year growth in our books.
The other issue I wanted to discuss is the asset quality. The stage 3 NPA numbers are at an elevated level. What are the measures you are planning to take to reduce those numbers? LIC Housing Finance is not known for doing a large number of one-time settlement or a sale to ARCs. So how do you going to tackle that?
Yeah, true, Manojit. Very, very true. As on 30th June, our gross NPAs were at 4.98%. Of course, this was just a marginal 0.02% increase from that of 31st March. As I said, we had a new technological platform introduced in the month of March. Yeah, some of the problems were because of that. We had some issues as regards presentment and adjustments and all that. But now that is more or less taken care of. We are well provisioned. We have a provision of almost 42% against the mandated 40% as on 30th of June. And so, yes, we are very much concerned with that. Not at all acceptable. 4.98% is not at all acceptable. Would ideally like to be around about 3.7 or maximum 2.75 or 3% would be what we are targeting. As regards what we are intending to do, yes, you are also right that we have so far not been very aggressive on the OTS, the one-time settlement strategy. And in fact, ARCs, we have not explored at all till now. Very recently, I think 4 or 5 months back, we have come out with an ARC policy, which has been approved by the board. Just this month, the beginning of this month, we had a meeting with some ARCs. Yes, definitely, we are exploring both the OTS. Now we are pretty much focused on the OTS route. We have also come out with a special recovery campaign for our borrowers, especially the NPA people, where we are sort of willing to negotiate on the interest, the additional interest part, and sort of sort of convince the borrower that, okay, come back, make it pay back all your dues, or if you want, you can close the loan account. So we are these are the 2-3 strategies we are following, and I'm sure in the coming, maybe not immediately this quarter, but definitely by Q3 we should be nearer to 3%. nearer to 3% from 4.98%.
The good thing about Q1 was the margins went up very substantially to more than 3% net interest margins. But do you think this kind of margins you can sustain?
Honestly, blunt answer would be no. Yes, see what has happened in Q1 last year. This 200 basis points rate high was passed on to the consumers, and I think the full effect of that came into Q1. The full effect was that experienced by us in Q1, and that is why this slightly, I would say, abnormal NIM or net interest margin of 3.1%. I think the more the targetable net interest margin would be between 2.5 to 2.75. That is what we are targeting. That would be reasonable, and that would be sustainable also. So that is what we are targeting, and I believe we should be within that range.
And finally, sir, RBI has recently said that the NBFCs and HFCs should lower the dependence on banks for funding. There was a meeting with RBI and the chiefs of NBFC, HFCs. Wanted to know how much is your LIC housing finance reliance on bank funding? How much is the total funding? How much is funded by banks?
Yeah, we had a meeting with the RBI governor and the senior management team of RBI. I think it was on 25th of August. The upper layer NBFCs. Yes, the governor did express his concern at the high exposure of borrowings from banks. Well, as far as LIC HFL is concerned, let me tell you, our exposure is not very high. We are only 32% of our borrowings are in the form of borrowings from banks. As you asked me in the beginning, we are a deposit taking NBFC also. Most of our funding is through NCDs, non-convertible debentures. So almost 54% of our funding comes in through NCD issues. We have been given the mandate to take deposits, but right now this is one area which we have not been very focused on. So of course, we do accept deposits. I think only about 5 to 6% of our funding is through deposits. This is certainly one area where we can explore and really push. I would ideally want deposits to go up, because since we have been given the mandate by RBI, we would definitely like to see at least 10-12% of our requirements being met by deposits. So 20%, not very high according to me. But yes, we will be exploring avenues to lower it even further as per directives of Governor.
Thank you so much for speaking to Business Standard. It was a pleasure talking to you.
Same here, Manojit. It was a great pleasure talking to you.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that led success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.